wherever you are in the world, to the Nigerian Stock Exchange Investor Engagement Series. It is a pleasure to have you here. This is our second ever investor engagement session and the first for 2020. Before we proceed, we would like to point out that we want to make this session as informative and interactive as possible in order for us to make the best of this event. And we would like to solicit your cooperation in making that happen while we go through the webinar guidelines. Firstly, attendees and panelists will be required to have a good running internet connection to be a part of the webinar. Secondly, there is a provision for a question and answer session at this event. Attendees may write their comments or questions to the speakers at any time in the public chat space. For technical and quality purposes, only the speakers will be able to use their microphones. When you're asking your questions, please indicate your name, your company, and location, as well as who your question is directed at. Thirdly, panelists will have their video and audio turned off except when they are speaking. Fourthly, while we will be using a mobile-friendly application for the webinar, attendees will be advised to join the webinar from their laptops or desktops to ensure optimum viewing of the presentations. And finally, the webinar will be recorded and attendees will be able to watch it later. A link to the recorded webinar and transcript of the recording will be shared within a few days of the webinar. The agenda for today's event is displayed on your screen, so you may refer to that to have an idea of what we will be doing today. Very quickly, I would like to introduce our speakers at this session. We will have the CEO of the Nigerian Stock Exchange, Mr. Oscar Onyema, OON, and representing the acting Director General of the Securities and Exchange Commission, Ms. Mary Uduk, is Mr. Uke Umeano. Mr. Uke Umeano is the head office of the Chief Economist at the Securities and Exchange Commission. We will also have Mr. Jude Chiemeka, the divisional head of the trading business at the Nigerian Stock Exchange. My name is Ekechi Ogwo, and I will be your moderator for this event. Without further ado, ladies and gentlemen, please allow me to deliver the opening remarks, the CEO of the Nigerian Stock Exchange, Mr. Oscar Onyema, OON. Thank you.
Good afternoon, distinguished ladies and gentlemen, and thank you very much for joining us for this second in our series of investor engagement. Today, we are going to be talking about the global context, what is going on with in Nigeria with regards to fiscal and monetary response, given the COVID-19 challenges that we've all experienced, and the state of play in the market, and then we'll take questions and answers. But before I do that, I must welcome all of you that are joining us. We have people joining us from all over the world, from Nigeria as well. We also have CEOs of some of our listed companies on this call. So I'm very elated. I must also thank the Securities and Exchange Commission for joining us in today's call. Unfortunately, the central bank is not going to be joining us. As you know, they are currently in the Monetary Policy Committee meetings, and traditionally they don't speak publicly the day before such an important policy meeting. But I will be discussing some of the actions they've taken already to address some of the challenges we've seen with regards to COVID-19. With that said, I welcome you all. We hope we can have a very insightful discussion. I will turn it back to Ekechi to lead us through the rest of the agenda.
Thank you, Mr. Oscar Onyema, for the opening remarks there. Without wasting more time, I would like to introduce, representing the acting DG of the Securities and Exchange Commission, Ms. Mary Uduk, is Mr. Oke Umano, who is the head office of the chief economist at the Securities and Exchange Commission. Mr. Umano will be speaking on the state of the Nigerian capital markets. Thank you very much.
Okay. Ladies and gentlemen on the call, I'll start by thanking the Nigerian Stock Exchange for this opportunity to engage investors and stakeholders in our market. The second of the series, but it's the first time the SEC is invited, and we're happy about that. First, I must say that we are happy with where our market is. We've been comparing our market with markets around the globe, and we are proud to say that even in the lockdown brought about by the pandemic, our market has continued to function. In the past couple of months, when everything has been closed, I would say, the Nigerian markets, exemplified by the Nigerian Stock Exchange, has continued to trade and even return positive results, and we're happy about that. We're also happy about the response the entire market gave to the happenings brought about by the pandemic. We're happy that all the business continuity plans and processes that were in place were able to be activated, and we started to trade. So we are happy with the state of the market right now. But as the regulator, we are also doing a lot because we realize that this situation may be here with us for a long time. So we are doing a lot to position ourselves such that we are able to continue to support the market. So we are making efforts and improving our ability to continue to supervise, continue to monitor the market, continue to do registrations and all the functions that we usually do, such that there will be no crises, there will be no, we'll be able to achieve everything we want to seamlessly. So that's what our focus is now, and we assure the market that, and investors too, that we will continue to support this market, we'll continue to regulate this market in the best possible way, such that it will be a market that is attractive to everyone. It will be a market that is transparent and open. Thank you.
Thank you very much for your comments, Mr. Umano. Mr. Umano, once again, is representing the AGDG of the Securities and Exchanges Commission. Please allow me to introduce, once again, to deliver a presentation on the Nigerian Stock Exchange market trends in the context of COVID-19, the CEO of the Nigerian Stock Exchange, Mr. Oscar Onyema, OON. Thank you.
Thank you, Ekechi. Today, I'm just going to give a quick overview of the global domestic economy. I'll talk a little bit about how the NSC market has performed and some of our business initiatives before we open it up for questions and answers. Next slide, please. Next slide. So as you all know, before COVID-19 became a pandemic, the global markets actually started the year with a lot of optimism, believing that having reached some level of agreement, and I'm talking about the US and China with regards to their trade tensions, that the world would benefit from that. And then COVID-19 came and changed all of that. So most of the projections for global growth, at least from some of the multilateral organizations such as the IMF and World Bank, originally indicated positive growth trends in the major regions of the world. But that all of those have now been revised downwards. So for example, the US that was projected to grow at 2% for 2020 is now projected to shrink by 5.9%. And the Eurozone is no different. Latin America, minus 5.2%. And if you were to look at Sub-Saharan Africa, the 3.5% growth that was originally projected is now going to be negative 1.6%. The only difference in that narrative is emerging and developing Asia that will grow at 1% versus the original projection of 5.8%. And there are various drivers to this, but at the bottom of it all is the fact that most of the global economies have had to shut down economic activity in the fight against COVID-19. Next slide, please. From a Nigerian perspective, Nigeria has been no different. The economy was already in a fragile state, just recovering from the 2016 recession, and projected to grow at about 2%, in 2020. What we've seen with COVID-19 and the oil price shocks that happened at the same time is that we're now expecting to grow in the second quarter of this year at negative 6.2%, but then start gradually recovering until the end of the year. While we'll be in a recession, the depth of that recession will continue to improve on a quarterly basis. So we're looking to exit recession sometime in 2021, and this is consistent with projections for global growth as well. If you were to look at the NSE All Share Index, you will see that it is very correlated with oil prices, and with oil prices, going negative, the Brent going as low as early 20s, and now recovering to $33 per barrel or more. The index has also followed that trend, and I'm talking about the NSE All Share Index. From an interest rate perspective, we continue to see declining returns, real returns, because of the relatively high inflation rate at double-digit 12.34%, when the 364-day T-bill is returning 3.19%. The MPC, the monetary policy, MPR, monetary policy rate, continues to be at 13.5%, but that remains to be seen what will happen tomorrow when the central bank finishes its meetings. The yield curve, interestingly, is showing a normal curve, indicating that perhaps the projections that we saw in slide 1, where we will be recovering, is actually true, because it is very supportive of that kind of trend. Next slide. So with the crude oil price shocks, with challenges around locking down the economy to deal with the health crisis that is COVID-19, both the fiscal and monetary authorities have responded quite well to this challenge. From a fiscal perspective, the federal government established a 500 billion naira COVID-19 crisis intervention fund, which is focused on upgrading healthcare facilities. In dollars, that would be $1.39 billion. They also set up, in addition to the $90 million available from the World Bank in the Regional Disease Surveillance Systems Facility, Nigeria has requested for an additional $100 million to meet the COVID-19 emergency and expand our healthcare capacity across the country. From our Nigerian Sovereign Investment Authority, we accessed about $150 million from the Stabilization Fund to support the Federal Account Allocation Committee, which is FAC, and they distribute money to state governments, which is a very critical arm of government in Nigeria. Debt and interest moratorium to states on federal government and central bank funded loans are being considered, to help ease the strains on state governments and their finances. The federal government has also done direct interventions, such as the one that was done in Lagos State by giving about 15 billion naira to support the state, which is the most hit in this COVID-19 challenge in Nigeria, to support them in their response. And we're currently looking at import duty waivers on medicine, medical equipment, and personal protective equipment used for treatment of COVID-19. From a monetary policy perspective, the central bank has also done quite a bit. They've established intervention facilities and they've indeed granted 1-year extension on principal repayment effective 1st of March this year. They've reduced the interest rates on these facilities from 9% to 5%. They've also established a 50 billion naira credit facility to be administered by NISA Microfinance Bank for households and SMEs, to support them, because these are some of the hardest hit sectors of the economy. The central bank has also directed commercial banks to consider temporary and time-limited restructuring of the tenure and other terms for loans granted to businesses and households, especially in the oil and gas, agriculture, and manufacturing sectors. In the aggregate, the central bank has committed about 3.5 trillion naira towards its efforts to fight the pandemic and position the country for export-led growth, and with specific emphasis on healthcare, agriculture, and manufacturing. They're currently developing a framework to provide grants and long-term facilities to biotech firms that are looking to do research in order to support research on a vaccine, to fight COVID-19. Next slide. The Nigerian Stock Exchange has also been very active in its response to COVID-19. We rolled out our business continuity plan in the March timeframe when we announced that we will be closing all of our facilities nationwide and going 100% digital. We made that transition seamlessly. From a trading perspective, our fixed protocol, XNet network, and virtual private network assets were all activated, and traders and various market players could access us that way. For the issuer community, our X-Issuer platform continued to be available for issuers to engage with us and disseminate market-sensitive information, which has worked very well. The investor community have also been able to continue to engage with us through the order management systems of our broker-dealer community. They've been able to engage with us through a number of our various digital platforms, including X-Whistle. The broker-dealer community have also been able to continue to do their filings using our X-Boss platform. In addition to that, we engaged with a number of partners to provide various allowances for market participants. For the issuers, we gave 60 days extension on filing of audited and quarterly financial statements. For the broker-dealer community, we gave similar allowance. We've also introduced thought leadership guidance that we would be putting out on a periodic basis. The first one was a guide holding virtual board, committee, and management meetings. This was disseminated to stakeholders just to give guidance on how to have effective virtual meetings and what needs to be done before the meeting and after the meeting, including updating memats of organizations. The exchange also gave forbearance on a number of things and gave guidance on a number of things, including how to deal with cybersecurity attacks, how to engage in related party transactions, given the waiver that we gave, without running afoul of our rules by engaging with the board to get approval and immediately announcing those approvals. From a CSR perspective, the exchange committed 100 million naira towards the fight against COVID-19, 60 million naira to the Capital Market Support Committee against COVID-19, and 40 million naira to the NSC Mask for All Nigerians campaign. The CMSCC is really an SEC-led effort for the entire capital market to come together to provide some interventions with regards to COVID-19. And the Mask for All Nigerians campaign is a campaign that the NSC is catalyzing to make sure that we get masks to the most vulnerable Nigerians and that we teach them the right way to use the mask, why they need to use the mask, and all the information that they need to protect themselves. These two initiatives are just part of the initiatives that various organizations and various sectors in Nigeria have put in place to fight COVID-19. Next slide. From a regulator and policy perspective, the exchange was able to get the federal government to categorize our market as an essential service. And therefore, when the entire country was locked down, we were able to move around to continue to provide services for the stakeholders using essential staff. The exchange was also able to collaborate with the Securities and Exchange Commission to grant all dealing member firms an extension of time for the submission of their audited financial statements. We were able to work with the Ministry of Industry, Trade and Investment, the Ministry of Finance, the Securities and Exchange Commission, the Financial Reporting Council of Nigeria, the Corporate Affairs Commission, and a number of other institutions to ensure minimal interference in the operations of companies as a result of COVID-19 pandemic. Some of these partnerships resulted in guidances on holding of annual general meetings of companies by proxy, allowing external auditors to submit their audits without putting the ICANN stamp as seal on these documents. Next slide. And the economy has reacted well. You know, some of the things that we've seen is that, you know, we had a double whammy and people expected Nigeria to fold over, but that hasn't happened. The government has engaged from a fiscal and balance of payments perspective to really try to address some of the issues, as I've mentioned earlier. They've also engaged with multilateral organizations to access various windows to get rapid financing to be able to address a number of the issues that have been raised by COVID-19. And that has worked well for us. The numbers have remained relatively low as compared to other countries in other regions of the world. Next slide. So the NSE market performance, as you all know, is our market, especially the equity or share index, is a leading indicator of what would happen in the economy in the short to medium term. And we've seen that while there was a lot of volatility in the market has actually recovered quite well as compared to the frontier market and emerging market indices, as well as when you compare it with benchmark Africa exchange or share indices using typical benchmark exchanges, Egypt, Johannesburg, the BRVM, Kenya, so it's really done very well. In January, our share index was the best at 7.5% return. And then we took a major beating in February and March, but quickly rebounded in April at 8.1% return, and in May at 9.5% return month to date. If you were to look at our price earnings ratio and dividend yield as compared to frontier market and emerging market indices, you will see that we're relatively underpriced, at 7.6 price earnings ratio as compared to the average for frontier market of 10.9 and 14.6 for emerging markets. If you look at our dividend yield, the Nigerian dividend yield on average is about 7.5%. That is as compared to 4.7% for frontier markets and 3% for emerging markets. And if you were to look at our returns year to date, it is negative 6.1% as compared to JSE at negative 13%, Nairobi at negative 15%, the BRVM at negative 17%, and Egypt at negative 27%. So while it's a negative number, it is the smallest negative number when you look at our comparator exchanges. So the capital market has held up pretty well. And from a dividend yield and valuation ratios, there are huge opportunities to be had in the Nigerian market. Next slide. I'm going to go into a little more detail on the three major asset classes that we currently offer. I'm going to start with equities. If you look at our equity market, the market capitalization increased from about 12.9 trillion at the end of 2019 to a little over 13.7 trillion in February, and then took a beating in May and is now recovering and is at about 13.1 trillion in May. This is a reflection of some of the impact of the oil price shocks and COVID-19 that we already discussed. Another thing to note is that we had significant listing activity, especially with the Boa Cement transaction that resulted in 1.1 trillion naira market capitalization joining the exchange. But we also had 3 rights issues and 3 placements, private placements. So we continue to support capital raising on the equity side of our business. Although we haven't seen IPOs, and we don't think we'll see IPOs in the short term, given some of the uncertainties that COVID-19 has brought into the equation. Next slide. From a trading perspective, we've seen significant activity, and I'll give you a little bit more color on that. But that activity has come primarily from financial services, consumer goods, and industrial goods. Because of the recent growth that we've seen in our ICT sector, it's not surprising that there's significant turnover there with companies like MTN and Airtel Africa in the ICT sector. The If you look at the foreign and domestic breakdown of value traded, the domestic sector has really stepped up big and have been about 59% of market activity in 2020. The foreign participation is 41%. This is a major shift from the trend that we've seen in the last 10 years. If you look at the foreign portfolio activity, about 59% of that is actually on the sell side, 41% on the buy side. And if you looked at the domestic activity in Nigeria and you were to break it down between retail and institutional, it's almost 50-50. So the retail participants have also stepped up big time to take advantage of the low valuations and the high dividend yields that exist in the market. Next slide. Our fixed income market has done very well from a market capitalization perspective, growing at about 8.91% year to date. And that is driven by significant listing activity from the federal government and a number of corporates. The federal government continues, if you look at slide 3, continues to dominate listing of debt instruments in the country. From a market turnover perspective, we saw a reduction of turnover in our market, 27% to be precise. And from a listing perspective, we'll continue to welcome new companies, new bonds, new fixed income securities on our market. Most recently, we welcomed the FBN Quest Merchant Bank 5 billion bond issuance, which we listed virtually using digital closing down ceremony. We are currently monitoring the federal government's Sukuk bond, which is currently in the offer stage, and we expect that listing to happen later this year. We also expect to see a number of bonds being listed this year as corporates adjust their capital requirements to the new realities of COVID-19. Next slide. On the exchange traded fund side of the equation, the narrative is a mixed bag. You have market capitalization initially increasing and then taking a beating in the February timeframe and now recovering again. And that is very reflective of the fact that we have quite a number of ETFs that are based on equities. But outside of that, we've seen significant opportunities in our ETF space. New Gold ETF, which gives investors exposure in owning gold, which is actually physically held in a vault in England, has returned about 48.94% year to date. The Vertiva S&P Nigeria Sovereign Bond ETF has also returned about 16.28% year to date. And so it's really a mixed bag. And that is also reflective of a diversified index suite that today gives exposure from a sector bias perspective to pension focus, to gold, to high yield bonds, to smart beta bonds, and ethical bias type fixed income products. Next slide. A number of business initiatives that we're undertaking to continue to provide value for various stakeholders. From a market technology perspective, we continue to provide superior market architecture, supporting other quote or hybrid markets, depending on the asset class. We continue to provide and support direct market access. Our feeds have very low latency. We have given the ability for investors to interact even over the internet as they engage the order management systems of traders, and which are directly linked to trade execution platforms. And as you know, our trade execution platform is highly coupled with our post-trade systems. From a market surveillance perspective, we continue to use SMARTS, which is really the gold standard globally when it comes to surveillance of markets. And for players that are looking for speed and closeness to the execution center, we offer co-location services. From an asset class perspective, we've given diversification, in addition to equities, debt, and exchange traded funds. We have a mutual fund distribution platform that we've launched. We believe that is the first of its kind in the world. We also offer closed-end funds and real estate investment trusts. And some of the benefits of the architecture and technology and product diversification is efficient pricing of these products, organized markets that are transparent and highly regulated. Next slide. So the exchange is currently running its 2018 to 2021 strategy, which is really focused on enhancing the customer experience, reorganizing ourselves to optimize our output, and taking advantage of big bang opportunities. And in 2020, some of the big things that we're looking to deliver include demutualization, which we've really worked very hard on. It's a multi-year project, which is coming to an end very soon. We did have a very successful court-ordered meeting and extraordinary general meeting. And we're now in the administrative processes to bring this transaction to a close. We're also looking to bring a number of new innovative products. Some of them I'll be talking about in the following slide, using our Enterprise Innovation Hub, which we launched a little over a year ago to accelerate the development of products and support for fintech companies. A number of the things we're doing to enhance our retail participation are beginning to pay off. We launched the beta version of our X Mobile platform. It's an app. We've highly encouraged the young population that are upwardly mobile to engage with us in a digital way. And we've recently completed work on our e-IPO platform that would allow us to execute IPOs in a completely digitized manner. Our derivatives project continues to move forward. We have gone very far with NG Clearing, which is our world-class central counterparty clearing house. And we're now going through the approval process with the Securities and Exchange Commission to get a CCP license for NG Clearing. Next slide. Before I discuss this slide, I just want to say that demutualization is also going to see the exchange restructuring into a holding company structure that would allow us to operate in multiple verticals. We're going to be giving a lot more information on that as we wrap up the demutualization process. From a listings perspective, we announced in January the launch of our growth board, which is our board that is designed to provide liquidity for VC-type investors and attract fast-growing SMEs and technology startups to use the capital market in a way that is convenient for them. And what we've done is to build an ecosystem around the growth board to provide various support services that will make it easier for the SMEs and fintech companies that we're targeting to be comfortable in a public market setting. We continue to engage with stakeholders in various verticals, ICT, fintech, agriculture. We continue to engage with intermediaries, financial advisors, and issuing houses to work with them, to work with sectorial associations such as the Manufacturers Association of Nigeria to develop and deepen pipelines for new listings so that you can have new investment windows that are highly attractive. From a retention perspective, our relationship managers continue to engage very closely with the listed companies, with the issuing houses, and I spend quite a lot of time, of my own time, engaging with these companies to make sure that we're properly servicing them and that they're deriving value from being listed on the Nigerian Stock Exchange. We are doing a few things that will be rolling out later this year. The first one is a special purpose acquisition company listing, which is a SPACs that would allow star management teams to raise money to be able to acquire existing businesses and showcase their management talent. So stay tuned for that and private market, which will be a good complement for public market offerings and provide a good pipeline for public listings. Next slide. From a product development perspective, our securities lending and borrowing initiative has really taken off big time. And I think this has to do with the fact that we're able to get the framework properly streamlined, remove the double taxation challenges that we were experiencing. And this was done in collaboration with the Ministry of Finance and the rest of the capital market, and passed into law in the Finance Act of 2019. So we've seen activity grow from 342,000 naira in 2019 to 47.29 million naira as of May 2018. And we continue to engage large holders of pools of assets to make them available for lending, and we continue to educate the market and potential lenders and borrowers on how the whole process works. From a hedging perspective, we, like I mentioned earlier, are working actively to deliver derivatives products to this market, following world-class standards, and that is why the CCP has taken us some time to develop, but we want to provide very good innovation and risk management capabilities that will allow market players to hedge some of their risk, given some of the high volatility that we've seen recently. We continue to work on providing alternative and multi-asset classes of securities. Both offshore and onshore partners are working with us on this. So you shouldn't be surprised if towards the end of this year, we come out with new REITs and ETF listings. From a sustainable finance perspective, we'll continue to lead this space, and we expect to see a number of green bonds listed this year. We note our MOU that we signed with the Luxembourg Stock Exchange, which is the largest exchange for green bonds globally. And we are working to support dual listings of green bonds in both of our markets. We've already recorded a successful listing with the Access Bank green bond listing on both of our markets, Lagos and Luxembourg. We're also partnering with stakeholders such as the Milken Institute to develop capacity and to increase green financing products in the market. And with COVID-19, we're expanding not only to green now, but sustainability as a whole. So we're also working on social bonds, blue bonds, and other types of structures. Finally, I'd like to say that our fixed income market continues to facilitate the development of economy-proof type solutions. And we're working very hard to make sure that we continue to drive liquidity in the secondary trading of the fixed income products that are listed on the exchange. Recently, some of our partners have started providing opening and closing quotes in the market. And we're working on a number of other liquidity generating initiatives to drive liquidity in our fixed income market. Next slide. Regulation is very important to continue to give confidence to players in the market. And for us, it is actually as simple as A, B, C, D. I mean, we've done a lot of work in collaboration with various internal, external, and global stakeholders to provide frameworks that are user-friendly and are very clear to understand. We've deployed technology to deliver good regulatory oversight to the market, and we've continued to support high levels of governance, not only for the broker-dealer community, but also the listed companies as we benchmark against global standards. Finally, we've really ramped up our transparency initiatives to make sure that when you come into our market, you have transparency and visibility into the quality of the dealing members, the intermediaries, the quality of the listed companies, and how compliant they are. And we have broker tracks and X-compliance platforms that support us with that initiative. Next slide. So this is just going into a little bit more detail with regards to some of the things we've done from a corporate governance perspective in regulation. It's important for me to indicate that we've made quite a number of changes. The last time I had this call with you, I promised that we would start publishing the activities of insiders. We've since done that. And these disclosures are providing a level of transparency for investors that we have not seen before. And so when directors, management, or other insiders buy or sell shares in their company, they now report, and we publish that information. And it's really been very helpful. The feedback has been very positive. We've also worked on some rules. We've done a rule gap analysis to see where the gaps are in terms of benchmarking against global standards. And we're now working through to make sure that we block those loopholes. We're also working to make our rulemaking process more dynamic and faster, to provide faster delivery of these rule changes, while not compromising on getting proper comments from stakeholders and validation of the various rules that we're rolling out. Finally, I should say that the National Council of the Exchange has continued to work with executive management to shift some of the decision-making authority to executive management in order to speed up time without compromising on governance by providing clear guidelines and policies that guide decisions that the executive management makes. Next slide. From a technology perspective, these are just some of the solutions that we've brought to market. The X Mobile I've spoken about. We launched the Investor Relations Pack a couple of months ago to really support the market participants through proper data dissemination. We're going to be launching in the second half of the year our Art Exchange platform, which is really a platform that we've created to provide for fractional ownership and democratization of fine art through tokenization, distribution, and trading of artworks. If you are familiar with Nigeria, you would know that contemporary African art has become very big in Nigeria and is being marketed globally. So what we're trying to do is to really make this use blockchain technology to make this available to the masses and allow them to buy fractional pieces of either a portfolio of art or a particular artwork. And there's a whole ecosystem and whole standards around that. And we'll be talking more about that when we launch in the second half of this year. Another exciting product that we're bringing to market is our Sentry GRC product, which is a software as a service platform that automates back office functions like governance, risk management, and compliance, and enables organizations to pursue a systematic and organized approach to managing GRC-related strategy and implementation. We've now completed work on this, and we'll be rolling it out in short order. Next slide. So we continue to engage policymakers to drive changes with regards to the ease of doing business, with regards to the environment in which we're doing business. We've recorded some success with the Finance Act of 2019, and we're now working with the government to reflect some of the things that ecosystem is telling us they would like to see in the Finance Act of 2020. We've also contributed quite a bit in revising and updating the Company and Allied Matters Act, which is the Company Act that guides what companies do. That act, well, it's not the bill to repeal and reenact that act is currently going through the various legislative and executive processes. But it will really modernize our company law in Nigeria. The last time the existing company law was modernized is 1990, I believe. From an institutional perspective, we continue to engage with PENCOM to advocate for higher PFA participation in the equity market, similar to what they're doing in the fixed income markets, and for them to be able to take advantage of a number of the new products that we're introducing into the market, such as securities lending and borrowing. So the exchange continues to engage with government. We are even talking with the Bureau of Public Enterprises and state government on privatization of state-owned enterprises as a way to unlock liquidity for the state governments and federal government, and put some of these state-owned enterprises into an environment where there's higher transparency, higher governance, and gives opportunity for new players to come in and have a stake in these organizations. Next slide. Thank you very much. I hope that wasn't too long. We will take questions.
Thank you, CEO, for that presentation. Ladies and gentlemen, that was Mr. Oscar Onyema, ON, the CEO of the Nigerian Stock Exchange, delivering a presentation on the NSC market trends in the context of COVID-19. It is now time for a question and answer session. As stated earlier, please type your questions in the Q&A section. We will also take a few verbal or live questions, so whatever your preferences may be, we will do our best to answer all your questions to the extent that the time permits. If you prefer to ask your questions verbally, please signify by raising your hand, and your mic will be unmuted for you to ask your question, after which it will be muted again. And just a reminder, in asking your questions, please include your name, your company, your location, and who your question is directed at. We will take the questions in batches made of 3 written questions and 1 verbal or live question per batch. And then the speakers will have an opportunity to answer your questions before we move on to the next batch. Thank you very much. So we have some questions here, and these questions are directed at the CEO of the Nigerian Stock Exchange. 2 questions from the registration link. The first question is from Tunde Ojo, who is a portfolio manager with Harding Loevner. His question is the NSE working with the CBN to assist foreign portfolio investors that are unable to repatriate their proceeds out of Nigeria. I'll take the question again. Is the NSE working with the CBN to assist foreign portfolio investors that are unable to repatriate their proceeds out of Nigeria?
Hello.
And the
sorry, go ahead.
The second question is from a retail investor, Oluwaseun Oluwaranti, and also for the CEO of the Nigerian Stock Exchange. The question is it not possible to obtain shareholders' information at the point of purchase of any stock that will enable the shareholder receive their dividend automatically, rather than the laborious process of chasing mandate forms and registrars? What is the exchange doing to make the process of collecting dividends much more seamless within the e-dividend framework? So I'll just paraphrase that question. What is the exchange doing to make the process of collecting dividends much more seamless within the e-dividend framework? Questions are for the CEO. Thank you.
Thank you very much. With regards to the first question on FX queues and access to FX, as you know, this is squarely in the court of the Central Bank of Nigeria. The Nigerian Stock Exchange, being a major player who is affected because a number of the investors in our markets are on this queue, obviously has engaged with the central bank. But this is really a question for the central bank with regards to how they're planning to reduce some of those pressures with regards to the FX queues. With regards to dividends, we've worked actively with the registrars, the CSCS, and the broker community. In fact, this morning we were on a conference call looking at some of the changes that need to be made to completely digitize the process of dividend payment, so that you don't have to fill these forms once it is declared and it is time to be paid, that you're paid in a seamless manner. Some of the challenges has to do with identity, has to do with investors filling in and updating their information. But we are working on a number of things. There's a committee that will be giving us a report in the next couple of weeks as to some of the things that need to be completed to shift the paradigm with regards to payment of dividends. Ekechi.
Yes, thank you, CEO, for that. We'll move on to the next question. I have a question here from Charlie Carnegie. Charlie's question is, it would be great to hear what plans you have ahead to A, ensure multinational subsidiaries treat their minority shareholders equitably and on a level footing with their parent shareholders. B, improve sustainability disclosure on the NSE. C, improve investor transparency and access, for example, by requiring companies to hold annual investor calls and meetings. D, enforce timely, comprehensive, transparent, and accessible annual and financial reports by steering companies away from delayed scan reports. I'll take that again. It would be great to hear what plans you have ahead to A, ensure multinational subsidiaries treat their minority shareholders equitably and on a level footing with their parent shareholders. B, improve sustainability disclosure on the NSE. C, improve investor transparency and access. D, enforce timely, comprehensive, transparent, and accessible annual and financial reports. That's from Charlie Carnegie. The next question, we will take two questions.
Sorry, Ekechi. This question has 4 parts to it. So if you don't mind, let me take this one first.
Okay.
Okay, so the first aspect, thank you, Charles, for the question. The first aspect is level playing field between minority shareholders in multinational corporations and the parent company. The first thing the exchange has done is actually, as you know, to catalyze the enactment of rules around minority shareholder protection when the majority shareholder is proposing certain related party transactions where we exclude the majority shareholder from voting his shares when he's the one making that proposal. And that has worked very well in the market and received good feedback. Now, with regards to multinational organizations, these multinational organizations, if the shareholder is a shareholder in the domestic company, they have rights that are protected in a number of our laws and rules in the country, including the corporate, including CAMA, the Corporate Company Act, and ISA, the Investment and Securities Act, and the rules of SEC and the exchange. So all of those protections are there. Now, we don't have jurisdiction over the foreign or the parent company that is a foreign entity. And so what we can certainly do is to use moral suasion to engage with companies that are the domestic arm of those foreign multinationals. And I suspect that what you're driving at is more in terms of corporate access, allowing for more transparency and giving intermediaries opportunities to question management. We've actually intervened on a number of occasions to encourage those domestic companies to engage in such discussions. Although some of the reservations that they have to do with moving, making disclosures that then move the price of the parent company's shares in foreign markets, given that Nigeria, for a number of these institutions, is quite a sizable portion of their total valuation. In the area of sustainability, we've done a lot of work and we've actually had significant progress here. As you know, we now have our facts behind the sustainability report. We've made sustainability reporting mandatory for premium board companies. And when they do those reports, they actually also engage with analysts, investors to present their report and take questions and provide answers for those sustainability reports. Now, for the main board and the growth board, at this point, we are encouraging companies to do sustainability report, but it's not mandatory yet. But for the premium board, it is mandatory. With regards to the third question, investor transparency, I did not quite get that question. Can you, Akechi, can you give it to me again, please?
Yes, the third question was to enforce timely, comprehensive, transparent, and accessible annual or financial reports, i.e. steering companies away from delayed scanned reports. Okay.
We actually, this is an area that we've really been very strong on enforcement because rules around financial disclosures meet international standards, and we engage earlier on with listed companies months before the due date for those financial reports. We engage with them to make sure that they're able to meet the timelines. And when they are not able to meet the timelines, rules provide for them to formally inform the market, take newspaper ads to explain why they are not going to meet the timelines, and to give guidance as to when they will be making those disclosures. So if I look at our enforcement, we probably, when it comes to listed companies, issue more fines with regards to timely disclosure of financials than on any other regulatory issue. So this is something that is very important to us because we do understand that information is critical to the market. And then the last question is on, what was the last question?
The last question is to improve investor transparency and access, for example, by requiring companies to hold annual investor calls and meetings.
Okay, so right now, companies are encouraged to do that, and quite a number of them do that. If you look at financial services sector, for example, all of them have analyst calls. We would go back and look at it, see what international best practices with regards to requiring companies to have analyst calls. We ourselves at the exchange provide a platform for facts behind the figures, facts behind the listings, facts behind restructuring when a company is restructuring. And I already told you about facts behind the sustainability report. So these are platforms that give the companies, the corporates, investors, and analysts and other intermediaries an opportunity to get together to review their disclosures and to take questions and provide answers. But we will go back and see whether we are able to write this into our rules and make it compulsory, and whether it will make sense for all the various segments of our market.
Thank you, CEO. We'll move to the next batch of questions. Just a reminder that we're taking 3 typed questions, and there's also an opportunity for a live question. If you will signify by raising your hands, we will come to you. So our next question is from Anson Carl, and I assume this is for the CEO of the Nigerian Stock Exchange. It doesn't say. He says there had been some observed divergence in the NGN rates versus the parallel market rates in the FX market. How do you see this impacting investors? And are there any actions from the market to alleviate this? I'll repeat that. There had been some observed divergence in the NGN rates versus the parallel market rates in the FX market. How do you see this impacting investors? And are there any actions from the market to alleviate this? The second question is from Marina Roche from Prudential Investment Managers. It says, can the NSC consider, the changes proposed to the free float rule from a percentage only approach to a minimum market cap approach, does this imply the rule will be less strict and allow companies with a high market cap? Sorry, I think I lost that question. Market cap, but the changes proposed to the free float rule from a percentage only approach to a minimum market cap approach, does this imply the rule will be less strict and allow companies with a high market cap? Sorry, I'm having some difficulty reading the rest of that question. I will come back to it. The third question, I will put these 2 questions together because they're very similar. One of them is from Oluseyi Odende, and the other is from Chuks Omonali. And the question is, we would appreciate more information on the growth board and SPACs to the extent that they can help with raising money for startups. We would appreciate more information on growth board and SPACs to the extent that they can help with raising money for startups. For our third question comes from Jay, who is self-employed. Please, can micro players lend securities? By micro players, I mean individuals and businesses that have asset portfolio worth about 10 million naira. Thank you very much. Do we have a live question? I think we have a question from somebody. Ayodele Afolabi. We will unmute your mic now so you can ask your question.
Hello, we can't hear you.
I think we lost that caller. Please, we'll go ahead and answer the other questions to the CEO.
Okay, thank you very much. The first question, I believe, is with regards to Naira rate against the US dollar rate and the disparity between the official rate and the various rates out there. One thing that I should note is that there's been an adjustment in the official rate from 305, 306 to 360. So the spread between what you're seeing in the investor exporter window and other windows versus the official rate has narrowed from about 20% to about 5%. So that is a step in the right direction and it's positive. Ours is more an advocacy type thing. We don't control anything in this market. It's more an advocacy with policymakers to see how we can continue to converge the rates and the windows, and hopefully at some opportune time just have one window and one rate. The next question is with regards to the free float rules. The free float rules that we're proposing are actually just designed to give more flexibility to companies. So if a company that is highly capitalized wants to list, sometimes insisting that they list a minimum of 20% may not necessarily work. And the reason why you're even asking them to list a particular minimum is because you want to drive liquidity. You want to make sure there's liquidity is available when that security is listed. Well, for some of these highly capitalized securities, even 5 to 10% could be very liquid. And if you look at markets such as the New York Stock Exchange, for example, they don't even use these benchmarks. They use different benchmarks. So what we've done is not to get rid of the percentage benchmark. It's just to add an alternative benchmark so you can qualify on a percentage term or a different benchmark. So that is what we're trying to do there, just to provide more flexibility for companies without compromising quality. The growth board and SPACs. So the growth board is already launched. It's available. We've provided an ecosystem of tax accountants, financial advisors, IR providers, legal advisors, and all kinds of service providers that are accredited by the exchange to work with SMEs, fintech, startup type companies that are fast growing, that are looking to access money, and to bring them onto the growth board and work with them to scale as they continue to roll out their business model. So this is something we launched, I believe, in January, and it's received very positive feedback, and the pipeline remains strong, even though we're all dealing with COVID-19 challenges. SPACs, on the other hand, has not been launched yet. We're working on it, and we hope that by the end of this year, before the end of this year, we should be able to launch our SPACs. And like SPACs in other parts of the world, what we're looking to do is really to support proven managers in raising funds to be able to acquire existing businesses and run them and provide superior returns for their various investors. So all the typical things that you will see in a SPAC, skin in the game from the management team or the promoters, escrow to keep the money that is raised in the IPO until such a time that you've discovered the target company that you want to buy. Protection for the investors in the sense that they would then vote to approve the target company you want to buy. All those types of features are going to be reflected in the SPACs. So it's like your traditional SPACs, and it just gives Nigerian entrepreneurs, as you know, Nigeria is a hotbed for entrepreneurs. Some of the most successful entrepreneurs on the African continent, cut their teeth here in Nigeria. So we're trying to, live up to our credentials as a marketplace that catalyzes the growth of entrepreneurs by providing another tool to allow them raise capital and act in a way to generate value and returns for their investors. Micro players, are they able to participate in securities lending? The answer is yes. Original securities lending rules limited it to institutional investors, but we've subsequently gone and introduced a retail aspect to it that allows smaller players to participate. So yes, you can lend and you can borrow securities. Thank you.
Thank you for that, CEO. We'll take our next batch of 3 typed questions and 1 verbal question. Now we have the question from Marina Roche from Prudential Investment Managers. Her question is, the changes proposed to the free float rule from a percentage-only approach to a minimum market cap approach, does this imply the rule will be less strict and allow companies with a high market cap but low free float percentage to remain listed? Number 2, what does the waiving of the enforcement of rules governing related parties or interested parties entail? I'll take it again. Number 1, the changes proposed to the free float rule from a percentage-only approach to a minimum market cap approach. Does this imply the rule will be less strict and allow companies with a high market cap but low free float percentage to remain listed? What does the waiving of the enforcement of the rules governing related parties or interested parties entail? Another question is from John Neipold, and he says, your presentation was very informative, and I laud you for all the efforts which have been made to advance and modernize the exchange. At the same time, for foreigners, all trades in and out of Nigeria depend on a liquid currency market. Foreigners were told that after 2016 and 2017, when flows were halted by the CBN, that the strategy would not be repeated. The same playbook is now being used again. Foreigners cannot simply trade in a market, no matter how well structured, unless the currency works. In a normal market, there should be no such thing as something that doesn't trade, just something that is mispriced. If the CBN is unwilling to help the market or let the currency move to its market value, is the exchange able to allow more fungible shares or other mechanisms so that foreigners can move money in and out of Nigeria? Because until the currency market operates normally, foreigners will not be able to participate in the market. I'll take that again. At the same time, for foreigners, all trades in and out of Nigeria depend on a liquid currency market. Foreigners were told that after the 2016 and 2017, when flows were halted by the CBN, that the strategy would not be repeated. Same playbook is now being used again. Foreigners simply cannot trade in the market, no matter how well structured, unless the currency works. In a normal market, there should be no such thing as something that doesn't trade, just something that is mispriced. If the CBN is unwilling to help the market or let the currency move to its market value, is the exchange able to allow more fungible shares or other mechanisms so that foreigners can move money in and out of Nigeria? Because until the currency market operates normally, foreigners will not be able to participate in the market. Our third question is from Mustafa Ahmed from IEI Anchor Pensions in Abuja. His question is to the CEO of the Nigerian Stock Exchange, and he says, we have seen a continued disparity in exchange rates that listed companies whose corporate action declarations are made in foreign currencies apply for dividend payment to shareholders. This event most times leaves investors at a disadvantage. What is the exchange doing to address this and to ensure an alignment of FX rates across affected listed companies? Once again, I'll take the question. We have seen a continued disparity in exchange rates that listed companies whose corporate action declarations are made in foreign currencies apply for dividend payment to shareholders. This event most times leaves investors at a disadvantage. What is the exchange doing to address this and to ensure an alignment of FX rates across affected listed companies? That's from Mustafa Aiya Anchor Pensions. And we have a live question from Olu Oshineye. So Olu, we will unmute your mic now. So please go ahead and ask your question.
Hello, can you hear me? Hello?
Yes, we can hear you. Please go
Great.
ahead and ask your question.
Okay, thank you. So, hi, Oscar. Thanks for a well informative presentation. My question is basically in line with the previous question from John. As you know, from a foreign investment perspective in the Nigerian capital market, confidence in the overall ecosystem in the market is very, very important. I know you initially mentioned that this is an issue for the CBN. However, I'm interested in hearing what's your view around the FX liquidity issue in the market, as we're currently facing challenges in reassuring our clients that Nigeria is still open for business in terms of investing, but more importantly, repatriating when necessary. As mentioned in the beginning, for us, it's all about confidence within the Nigerian market, especially considering Nigeria is a very key market, not only for us as a bank, but for our clients as well. Thank you.
Thank you. Kechi, can I go ahead with answering the questions?
Yes, sir. Please go ahead.
Okay. Thank you very much for the questions. The free float question, I believe I answered already. It is to give flexibility. The next question on, what does the waiver of the related party transaction rules entail? Okay, so when we engaged with the CAC to provide guidance around the AGMs, annual general meetings of companies, by proxy, the CAC, the Corporate Affairs Commission, was very clear in their guidance that it's only ordinary business that can be done in such AGMs. Related party transactions, if you follow rules, require you to bring those types of transactions to your shareholders. And while you would bring it in an AGM setting, it is not ordinary business, it's special business. And CAC is not allowing special business, or wasn't allowing special business for AGMs by proxy. So we needed to provide this accommodation to companies to allow them to continue to engage in related party transactions and provide transparency by publishing and disclosing once the board has approved such transactions. It's a temporary measure until the COVID-19 crisis is over. I hope that answers your question. With regards to FX, I think the next three questions are actually FX questions. Let me start by saying that I'm not speaking on behalf of the central bank. And the only information I can give you is actually my own personal views. It's very important because, as you know, they are currently meeting and we don't know what policies they're going to be announcing tomorrow. The exchange already has done 2 or 3 listings on the equity side that allows you to have fungibility of shares in and out of Nigeria. We have Seplat, we have Airtel Africa that we did with the London Stock Exchange Group. And we do have an agreement with the London Stock Exchange Group to jointly develop such markets. So it is something we're already working on, and we're very supportive of. The next question is on the disparity in exchange rates with regards to corporate actions. I believe what you're saying is that when companies that have cross-border investors are paying dividends or doing other kinds of corporate actions, the exchange rate they use differs. I believe, and I would have to get back to you on this, but I believe that what we've done as an exchange is to provide general guidance as to what companies should do. We've not promulgated any particular exchange rate, but if this is becoming an issue, we're happy to look at it again and see what best practice is. And best practice in the context of a company of a country that has multiple windows. So we will get back to you on that, if you don't mind. The FX liquidity situation, and I personally believe that there's actually liquidity for FX. You will get it at whatever price you get it. The challenge is taking the money out, and that whole queuing system that we saw in 2016 is something that we are strong advocates against. However, we don't control that. We can only advocate, to make sure that if you're going to have a queue, it has to be very effective and efficient, and people shouldn't wait too long on that queue. Our preference would be that, the queue did not exist in the first place.
Thank you, CEO, for that. We'll move on to the next batch of 3 questions, 3 typed questions, and 1 verbal question. The first question is from Bolahon Bello, and he says, can the NSE consider the development of a clear ESG theme for listed companies to guide responsible investing and to enable investors take clear decisions through an ESG lens? Can the NSE consider the development of a clear ESG theme for listed companies to guide responsible investing and to enable investors take clear decisions through an ESG lens? The second one is from Godwin Avo. He is a portfolio manager with Power Pensions. His questions are, number 1, what is the exchange take on share buybacks by companies whose free floats are considered even inadequate? And question 2, PENCOM's investment regulation does not support security lending. What are you doing to have this addressed since you want PFAs to get involved? These questions are for the CEO of the Nigerian Stock Exchange. The third question is from Philip Owumaroge. Sorry if I don't get the pronunciation. He is a technology consultant. What is the plan with regards to the launch of the EIPO service? Will this service be made available to ISV and other technology providers so that an investor using such platforms can easily and with existing identity find and partake in ongoing IPOs? Then we will take a live question from Wale Okoriboye. So Wale, please, we'll turn off your mic now. Please go ahead and ask your question. Hi, is Wale there? I think we may have lost the caller, so please we'll go ahead and answer the 3 typed questions. Thank you.
Okay, thank you. The first question is about ESG theme for listed companies to give better guidance for responsible investing. Yes, we're willing to look into that. We're very supportive of the whole area of sustainability, and we've indeed built a lot of capacity in the Nigerian capital market over the last 5 years. We've hosted quite a number of seminars on ESG and sustainability and you know, climate-friendly processes and policies within corporates that will give the necessary background to support capital raising in some of these instruments that we're seeing come out in market space. And that's one of the things that drove us introducing sustainability reporting as something that is compulsory for premium board companies. So yes, we're happy to look at this, see if we can create an ESG index that gives clarity to responsible investment type houses as to what companies have met the standards and are part of that index. The next question is on buybacks, share buybacks. First of all, let me say that the market, and when I say the market, I mean our rules at the exchange, are very clear on free float thresholds. For the premium board companies, for example, it is 20% or 40 billion naira, 40 billion naira or 20%, whichever is lower. So a company that has a very high market cap, that has you know, 80 billion or 100 billion in free float, but that free float doesn't equate to 20% of the company, you may view it as having low free float, but it is not in violation of our rules. Now, if such a company decides they want to do a share buyback and they meet all the standards, we don't have any basis for stopping them from doing that share buyback. And at any rate, you know that they can't do any share buyback without getting approval from their shareholders. So that is the context in which you're seeing this. And, you know, given the volatility the market has seen and given the low valuations with the high dividend yields, you can see why a number of companies may want to do the buyback. It's a way to give money back to shareholders. It's a way to support the you know, share price. And more importantly, I think, you know, if you have excess money, it's a way to give back money to the owners of the money, which is the shareholders. So I think that we will definitely be enforcing our rules around free float, but you know, I just want to be clear that your perception may not necessarily be consistent with what the rules provide for. With regards to pension regulations, yes, we continue to engage with PENCOM on this issue of allowing PFAs to do securities lending. PENCOM has been very clear with us that the law, the Pension Reform Act, does not allow PFAs to do lending, but our own interpretation is quite different. So we're having those discussions, and at some point, we're either going to agree or disagree. And if they really want to do it, would you know, look at the laws and the rules and see what needs to be changed, consistent with global best practices. So those conversations are going on. With regards to the EIPO platform, it's a platform that the exchange has built, and it is a platform we're making available whenever there's an IPO, that the various participants can access that platform, indicate their interest, participate in the market clearing price, and get allocated the various shares in a way that is automated and is inclusive. So it's supposed to include everybody. I hope that answers your question. Thank you.
Thank you for those. Thank you for those answers, CEO. We'll go to our next batch of questions. I think the gentleman that dropped off the last time is back with us, so we'll take his question at the end of the typed questions for this session. The typed questions that we have, the first one is from Oise Ajayi. And the question is, are there any incentives or initiatives the exchange is willing to implement in increasing the participation of PFAs and insurance companies in the equities market to reduce the reliance on FPIs? The second question is from Basi Essien. And he says, when the NSC demutualization is completed, what will be the relationship between the exchange and stockbroking firms? So we'll go back now for a verbal question. If he's here with us, Mr. Wale Okunriboye, we will unmute your mic now. Please go ahead and ask your question.
Hello? 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 Okay.
Yes, we can hear you.
Yeah, so my question, I don't know, part of my question was on FX. I think somebody had asked it earlier. My second question is just on ETF. So we have like the new gold ETF, which allows local investors investing in an asset you have offshore. Is it also possible to have other type ETFs I think in a very similar structure, other commodities, oil, other type of commodities, and maybe some things like the S&P 500 or some global stock indices packaged as an ETF. Aside just, I don't know, what are the issues that are preventing more assets, more structures like that, like the new gold ETF being replicated? Or I would say, what's the real issue that is preventing that pipeline from being much bigger than just new gold? Yeah. That's all really.
Okay, can I go ahead?
Yes, sir, please go ahead.
Okay, thank you very much for the questions. Yes, the exchange is open to discussing incentives for PFAs, participation in the market, but those incentives don't necessarily need to come from the exchange. We think that if you look at Africa, for example, and you look at the distribution of PFA assets in various countries, 5% in equities is abnormally low. The average is a little over 20%. And for a country with the kind of demographics that Nigeria has, where the average age for most of the citizens is less than 25 years, you're not doing any service to your savers who 20, 30 years from now are going to be accessing funds. And if you've not put those funds in instruments that would beat inflation and still give real positive returns, you would agree with me that our population rate is currently growing faster than the growth rate of the economy. So every year, the country, the individuals, the per capita income is getting lower. And so we can't wake up 20, 30 years from now and give people returns that would not make sense. And so we're also looking at it from that perspective, not just the perspective of trading a particular asset class, because we are a multi-asset class exchange, and we want to provide efficient markets for each of those asset classes. The question with regards to demutualization and the relationship between the exchange and brokers. I'm going to answer this question in a roundabout way, so please bear with me. When the exchange demutualizes, when we complete the demutualization, in the next 2 to 3 months. We're going to be doing a restructuring as well. And all of those approvals, actually, we're getting them as we're getting the approvals for demutualization. And the restructuring would transfer the Nigerian Stock Exchange, to the Nigerian Exchange Group PLC. That is the entity that the shareholding will be in. And under that entity is going to be a non-operating holdco. Under that entity, you have the operating exchange as a subsidiary. You have NGX Regulation, which is a company that is going to house all of our regulatory activity and will give us clear separation between commercial interests and regulatory interests. And then you're going to have other verticals, other companies. So the brokers, you're going to decouple their ownership interest in the current NSE. They will get shares in the holding company. For the exchange, the operating exchange, they will get trading licenses. I hope that explains that relationship now in a clear way. With regards to the new gold ETF, when I was talking about fungibility and products that we've listed, this is another example of a product that we've listed that gives you a hedging tool against FX and gives you a safe haven when there is volatility in more risky and more volatile asset classes. So this is a product that we support, and we would like to list a lot more products like this that give you that fungibility that we spoke about earlier on. The exchange is very happy to list them. You just need issuers and managers that are willing to put together the product and then list it on the exchange. And we're very happy to work with anybody that is looking to do this type of ETFs.
Thank you, CEO. We have time for just one more batch of questions. And we have a couple of questions here. One of them is from Akimbamidele Akintola. And the question is, please, does the NSE have new rules on insider trading in line with global best practice? Our second question is from Olu Oshineye, BNP Paribas in France. Your tenure as the CEO has between 8 and 9 months left. Please, can you confirm if there is a succession plan in place to take over from you, as well as elaborate further on the holding structure for the NSE after the demutualization? Thank you.
Is there any other question, or this is it?
No, these are the last questions.
Okay, thank you very much. Okay, so with regards to insider trading, actually, if you follow best practice, insider trading rules and governance and policing is actually the primary role of the statutory regulator. We've looked at quite a number of jurisdictions. Now, you can have delegated authority where self-regulatory organizations such as the Nigerian Stock Exchange get delegated authority from a statutory regulator like the Securities and Exchange Commission to do certain things. It is in that context that the exchange has developed rules against insider dealings. Sorry, not insider dealings, insider trading, where you're trading on material non-public information and trying to extract some gain before that information is public. And it is in that context that we've gone to great extent to automate the entire process for disclosures and reduce opportunities for insider trading. It is in that context that we've also mandated that insiders, when they do transactions, must disclose those transactions. have them properly disseminated, and we're enforcing that. So all of those things are efforts we're taking in our own little way to make sure that we police the market appropriately, and that we work with the Securities and Exchange Commission to address concerns around insider trading. With regards to succession planning at the exchange, we do have a very robust succession plan that is overseen by the National Council of the Securities of the Nigerian Stock Exchange. And you would already have seen that robust succession planning already playing itself out. With the restructuring that I just described a moment ago, at the March 3rd court-ordered meeting, an extraordinary general meeting, I was voted as one of the directors for the non-operating holding company as the designated group CEO. The operating exchange, we're going through the process right now to select who the individual that will run the operating exchange. NGX regulation also has a designated CEO in the person of Ms. Tinua Ware. And so that succession plan is already unfolding right before us. And we do have a relatively good amount of time to complete the process and announce the individual that will be taking over as the CEO of the operating exchange. So this being the last set of questions, let me thank everybody for your questions, very detailed and very thought-provoking. Thank you very much. Ekechi, I'm passing it back to you.
Thank you, CEO. Thank you for the answers. And I apologize if we couldn't get to your answers, but we assure you that we will answer your questions and send them to you by email at a later date. At this point, I would like to introduce to deliver the vote of thanks the Divisional Head of the Trading Business at the Nigerian Stock Exchange, Mr. Jude Chiemeka. Thank you.
Distinguished ladies and gentlemen, please permit me to stand on the existing protocol. First, let me start by thanking the President of the National Council of the Nigerian Stock Exchange, Otumba Abimbola Ogumbanjo, the ex-official, Mr. Aiboje Ike Imohede, CON, and other National Council members for joining this call. We would also like to show our profound appreciation to the Acting Director General of the Securities and Exchange Commission, Ms. Mary Uduk, represented by Mr. Oke Ubeano. We would like to assure all our investors and all the stakeholders that their concerns and suggestions and questions are duly noted. The ones that have not been answered certainly will be answered, and the information will be communicated to you. And as always, we'll definitely make all the necessary adjustments required just to ensure that the market continues to run in a very seamless, transparent manner as always. This event holds twice a year. This is the first session for the year. The second session will hold sometime in October this year, God willing. Well, thank you all for taking the time to participate in the call. Finally, I would like to thank my colleagues, all my colleagues who are involved in putting this great event together, especially Toyin Alake and her team in secondary markets. We look forward to your participation at our next session in October. Continue to keep safe and have a very good evening. Thank you. Back to you, Ikechi.
Thank you, Jude. I would just like to state to all our participants right now, a survey is going to be sent to you after this event. Kindly fill out the survey and send it back to us, which will help us to present such events in future and have them better interactions with you in the future. So thank you for your time once again. And as stated, a link to the recorded webinar will be made available to you within a few days. Thank you very much.